I'm Jeff Quartermaine. I'm the Chief Executive and Managing Director of Perseus Mining Limited. Perseus is an Australian mining company whose activities are solely focused on the African continent, where we're an explorer, developer and producer of around 500,000 ounces of gold each year at an all-in site costs of around $1,000 US. Clearly the last couple of years have been very good for us with the high gold prices, and we've been generating an awful lot of cash and profit, which we've been able to deploy into growing our business and establishing ourselves very firmly in the upper ranks of the mid-tier gold companies on a global basis.
Jeff, good to see you.
Yeah, you too.
Here we are up in the mountains, Colorado Springs. Rather beautiful, isn't it?
It's beautiful here, lovely.
Yeah. More importantly, you're doing the rounds there. So I know, been lucky enough to sort of bump into quite a few of the companies here, and also the money. There's a lot of money here, a lot of industry looking at companies like yours and others. What are you here for? What do you hope to take away from this?
Well, the main purpose in coming here is to see a lot of our existing and prospective investors, basically. So we've got a very, very busy program and catching up with a lot of people, and just basically bringing, our shareholders who we don't see every day up to speed with what's been happening over the last 6 months.
And face-to-face is very different from reading about it, right?
Oh, indeed. I mean, there's absolutely no substitute for the interpersonal discussion and being able to read the body language and what have you. So, fortunately, the way the company's going, the body language has been pretty positive.
He skipped into the room. Yeah, right. I think there's a lot of housekeeping going on since we last spoke. I'm not quite sure order of play that we should focus on, but I'm going to go with, obviously, last time we spoke, you just acquired a company. Corporate culture, onboarding, however you want to frame it, how's it all going?
Look, it's going extremely well. I mean, the acquisition I think you're referring to was the Nyanzaga project in Tanzania, which we acquired from Allcorp earlier in the year. That's going extremely well, actually. We're very pleased with that. We're aiming to take a final investment decision in December this year. So there's a lot of work going on at the moment preparing for that. And one of the really pleasing aspects of it is the very high level of interaction that we're having with the Tanzanian government. This is one of those very rare occasions, I think, where the agenda of the government is totally aligned with ours. Both of us want this project developed and want to have it into production as quickly as we can. And so we're working together very cooperatively, and I think the investment decision timeline is well within our grasp.
Right, and obviously you're an African producer, you've worked in Africa, but these are separate countries with separate personalities, shall we say. So you kind of got to get used to the Tanzania, but likewise the company that you've just taken over needs to, get used to the way that you like to work as well. So you're managing a lot of process and personality. So how's that going from that angle?
Well, actually it's interesting because the company that we took over didn't have a very extensive staff. They had a few people in Tanzania who fitted in beautifully in with our team and are really looking forward and seem to be enjoying the leadership they're receiving. And so that's been terrific. Working with the government, that's an interesting thing. I mean, Tanzania has a history, some of us not so good in recent times, but there is change afoot there. Basically, these countries, really basically at the core of things is that they want to make sure that their country receives its fair share of the wealth that's being generated. And we're good with that. We think that that's absolutely the way it should be. So it's a question of working out how to allocate the benefits as they're derived and making sure that distribution's fair and equitable.
Right, but it's a case of no more and no less.
Yeah, I mean, look, the world's changed, hasn't it, over the last 50 years or so, and I think that, without a recognition of the fact that all stakeholders need to benefit from these things, you would be really out of place in this modern world.
Right.
And we're very comfortable with the way it's working, and we can see that, there is enough to go around. Our shareholders are definitely not going to miss out, but at the same time, the country's going to benefit too.
Right, okay. And I think the only reason I ask is, in the good times, there's a lot more money floating around and people's perception of, I'd like a bigger piece of X, Y, or Z. Also, those are conversations which have happened in the past, not necessarily with your company, but you're sort of conscious that keeping everyone up to date with...
Oh, no, it's happened in the past too, and I've explained to people when we're talking about this is you can only eat a cake once.
Yeah.
And if you decide you want a bigger piece of cake, you've got to take it from one of the other stakeholder groups.
Yeah.
You know, do you want us to pay our employees less, or perhaps give less to the community?
Yeah.
Or, you know, pay for goods at a lower price?
Yeah.
Or no, do you want to take it from our shareholders? Well, they actually don't really want to give it up. So, you know, we've got to be sensible about how the distribution of benefits occurs. And it is a challenging issue, and it's one that everybody has their own perspective. And that's what negotiation is about, finding enough common ground to go forward.
Right, okay. Obviously, you referenced it already. In this high-price gold environment, you're building a nice cash reserve again. You keep keeping it, turning over, take advantage of it while it lasts, and we hope it does last. But you've got to work out how you allocate that capital.
That's right.
Most recently, you've been also doing things like swapping out your equity positions in a couple of companies. So why are you doing that?
Excuse me, sorry about that.
Yeah. You got the travel lurgy.
I have indeed. Yes. No, look, the situation is that we do have a very strong cash balance, and we've been working at figuring out how best to manage that going forward. Now, there's various competing needs for that capital. One is we clearly need to make the business viable under a range of operating conditions. Two is that we need to be able to service our social license to operate. Three is we need to be able to invest in the future of the company in growth. And four, we need to return capital to shareholders. And it is once again about getting the balance right. Now, in terms of the investing in the future, we invested in we took over all corporate, invested in that, and got ourselves a 15-year project which improves the quality of our asset portfolio. We did have an investment sitting in a company called Montage that had done very well on the market. And we took the opportunity while the price was high to switch out of that investment where we had very little influence on the direction, and to reinvest that capital into a significant stake in Predictive.
Made a bit of money though.
We did make some money on the transaction, and we made that switch from a 9.9% interest in Montage to a 19% interest in Predictive.
Yeah.
And with a small amount of top-up, I won't say, along the way. But the point is that we're not necessarily going to take Predictive over. We may do once we've done due diligence, but we will have a seat at the table when the ownership is ultimately determined. And if somebody comes in and wants the asset more than us and is prepared to pay, well, we've never turned our back on making a profit. So, but I think, you know, what we will be doing on that particular one is doing some serious due diligence in the next few months and determining if this project is right for our portfolio. Prima facie it is. Prima facie it looks like an outstanding opportunity, but we need to prove that before we start really putting our money where our mouth is, so to speak.
Okay. And sticking on the housekeeping theme, you stepped back as, I don't know, chairman, not chairman, were you interim chairman? How do you phrase that?
Well,
temporary. Was that temporary role?
Well, I think I was interim
Right.
executive chairman. No, well, what the position there was that late last year I took over as executive chairman with the intent that it was very much an interim role, and a task that I would have would be to identify and introduce a person, a non-executive independent director who could step into the role and be the non-executive independent chair for the next phase of our growth. We were very fortunate to be able to attract a gentleman called Rick Mennell, who's a South African person, very well, very, very experienced in the industry. And he's kindly agreed to not only join our board, but also take over that role as chair, which has afforded me the opportunity to step back to my original role, which is chief executive.
So you're not going anywhere?
I'm not going anywhere.
Just want to be clear.
No, this Lurgy might have something to say about that. But
you have no plans.
I have no plans, so
Yeah.
that's exactly right. So, no, look, it's an interesting thing, actually. It's been an interesting journey because I've always had this view that you should separate the executive from the chair role. My 9 or 10 months in this position has firmly convinced me that is the correct way to go.
Yeah.
From a governance perspective, it's essential to separate those roles because the sorts of things that a chief executive looks at and focuses on are quite different to what a chairman should be thinking about and looking at. And so by separating those roles, it gives the opportunity for the company to get the best of both worlds. And Rick is an extremely experienced person, who's chaired many companies, and is very well connected throughout the African continent. and I think he brings an enormous amount to our board.
Yeah.
And certainly my feedback from the market has been very positive. We're very pleased with that.
Right, and I agree with that wholeheartedly. The great joy about speaking to companies like you is I don't necessarily need to dive down and delve into the detail of each asset that you have. I can look at your quarterlies and go, have they hit guidance in terms of ounces, in terms of margin, in terms of, and therefore costs? You seem to be doing that and filling in the kind of reserve resource numbers as well.
Yeah, well, that's true. I mean, look, to say that we don't have operating challenges would be completely false. Every day is a new day, and we have our share of challenges. But we do have an outstanding team of people, which we've actually been building on recently. The most recent person to join the leadership team is a woman called Amanda, who's come in as the Chief Operating Officer.
Yeah.
And she brings an enormous amount of experience to the table, working with Brett Harmon, who is our General Manager of Operations. And between the two of them, I think those assets are in very good hands. And this is a function of the growth of the business. I mean, historically, I've had a fairly, close role with the operations, but the larger we get, the bandwidth starts getting a little bit tight. And so by bringing in Amanda, she's going to be doing a terrific job, I'm sure.
So I guess the question there is, growth is such a key word in a business, any business, quite frankly. There's the organic from the current businesses that you have, including Nzaga, where Tanzania, where you brought on a new project and potentially will look to add with your recent 19.9% stakeholding as well. And she'll take care of that. Is that her bag entirely?
No, well,
I'm trying to work out what you're going to do in terms of growth.
her bag is actually running those three operations.
The three operations.
And making sure that they're operated in a very safe manner, in an environmentally responsible way, and they deliver those ounces at the right cost. And that is her role to do that. We do have, another person coming in going to oversee the organic growth piece, the exploration, the studies, and the development.
Right.
And I have my Chief Financial Officer, etc., and head of corporate affairs. So, between us, we manage the whole lot. And interestingly enough, we have, of my leadership team, 60% are female, which is an unusual thing in this business. But people say to me, what are you, on a crusade of some sort? And the answer is absolutely not. What I'm really pleased to say is that I've employed the best people in the business for our leadership team, and it just so happens that their gender is female. So
it works both ways, right? It's a fact we're even talking about. We shouldn't even need to talk about it.
No.
So that's true equality, not even having to talk about it.
Yeah, no.
I guess where I'd like to go next is just trying to understand, in this macro environment we find ourselves in now, lots of M&A, and it feels expensive sometimes. There's a bit, and some of the deals that have happened, you look at the numbers and you go, well, that'll be interesting, trying to pay that back. But it also says that there's not a lot of good deals out there, and there's a heck of a lot of competition because everyone who's producing is making more money than they have done for quite some time. Yeah. And growth comes, I guess, easy growth, not necessarily best growth, comes from acquisitions. It's expensive. How do you view what's going on out there in the world? What's that doing? Is it attracting people into the gold space? Does it affect your thinking?
It's a very interesting situation. I mean, and it's different on each of the continents. So, if you look at Australia and North America, I think is heading in the same direction based on a conversation I was having earlier today. There's not a lot of new assets coming through, exploration, discoveries, etc. There's a lot of recycling, repurposing, whatever. Renaming, indeed, that as well. Which means that those assets are a little bit tired and are fairly difficult to you've got to work very hard to make them work. On the African continent, there is a lot more opportunity now, and outstandingly good opportunities, both at a grassroots level and further up the food chain. Now, it also comes with some additional risk, and so. In terms of the business there, it's about balancing risk with return. Now, one of the ways that we've sought to manage that, of course, is by diversity, so having multiple operations across multiple countries And by doing that, we take the view that, at any given time, one country might be struggling a little, but the others are going okay, and similarly with the operations. But we can see in Africa a number of outstandingly good mineral resources, and I'm very pleased to say that we own 2 of those, and hopefully we'll own a 3rd in due course. So having put those sorts of high quality assets into the growth profile, is an important piece in terms of transitioning your business.
Gross.
That's
critical. Even when you're a big boy like you guys are, it's effective. Anything is harder. The bigger you get, the harder it is to move the dial. But you still got to do the simple things right, haven't you?
No, absolutely correct, and that is a very, very, very true statement. And in our business, we say, very, very regularly that what it matters is those operations, because if they don't work, then the rest's academic.
Yeah.
If they don't work, then we can't afford any of this fancy stuff. So it's back to the fundamentals, make sure that they work, and then the rest will hopefully look after itself.
Good man.
Thank you very much. Good, and thank you for having me.